Welcome to the Boxcar 6 inaugural weekly meeting. Had a couple of trades, just had one close right before this meeting started. So um, I guess I can share my screen. Here we go. Oh, I guess I'm not sure which screen I shared. Hang on a second. Are you guys seeing option view or something else?
Option view, T-log.
Oh, hey, Tom.
Hey, Tom.
This is actually the report. So this is the
Okay.
trade I just closed for 489. So I got to go into the thing where I edit it so we can figure out what the actual return is. 489. Okay, so it looks like on the margin we made 3.62% on this trade. The one that was opened on Thursday. So I guess not much to see in option view. Let me load these trades in. Looks like I got to bring up Thinkorswim over here. And then hide positions. And then these are, so this was the trade right before it was closed today. Basically, we'd gotten up to the max profit we're going to get anywhere above the long strike of the debit spread. So not much juice left. I closed half of it on Friday. You can see the 45-cent debit for the 3-lot credit spread closing, and then this was just rolling up the short strike of the debit spread to basically cut it in half to go from a 10 wide to a 5 wide. And then today I got filled on these two. So let me just analyze these. And now it's flat, of course. So these are all the fill prices that I had. And I can just check that with hide simulation. So yeah, everything's flat. So we started this, I guess it's easier for Backtrader to do option view. Let me just take a screenshot of this T-log. And then I can keep track of all the adjustment days and times. Okay, so we started on the 17th at 1:39 my time. So March 17th. And that would have been about here, would have been the opening trade. I was still thinking. It's still thinking. It's not responding, not thinking. Oh, well, that's nice. Let me just close this and restart it. And yeah, Andre, the trade did work out pretty well for sure. Now let me go back on the 17th again. Just right about here. I guess I can pull up the spreadsheet too. Let's see, this is the current one. So this this is the one piece that I'm trying to figure out how I want to set up with this spreadsheet. So I've got like the closed contracts down here with the realized P&L. This was the original long put. It's actually, lost $3,000, but we made money on the other ones where we rolled them. And So the net, I think, was this. I think that's right, but I got to figure out the best way to calculate this percentage lost from the current spread. It probably has something to do with when I make an adjustment, you have to record the price of the debit spread, the original debit spread, because you haven't changed anything, but it's the price of the spread when you make the adjustment is what you really want to know. Hey, Dan, I know you're here. How do you handle when you roll up or move or adjust your debit spread in your spreadsheet? How do you track that? Do you just use the realized P&L and then update the prices in the debit spread in your spreadsheet?
Good morning, Tom. Good morning, everyone. Yeah, I calculate two parameters with regard to the debit spread. First is the cost. The spreadsheet calculates that, and then the maximum possible gain that debit spread might make, and the spreadsheet calculates that. And then I express
I guess
the
actually, here's your spreadsheet. I've got a copy of it. Is this the one?
yeah. So there's obviously nothing in there now, but if you look right in the center where it says debit spreads,
Right.
you can see the cost, and that would be calculated. And then depending on the maximum width, which the user has to input, like I think I mentioned to you, Tom, in an email, everything that you see there in Robin's Egg Blue requires a user input.
Right.
So the width would go in there, and then that allows the maximum profit of the debit spread to be calculated, which is, of course, the spread width times 100 minus the cost of the debit spread. So, so I have those two parameters, and then off to the right of that section, you see PDS, and you see the percentages 1 and percentages 2, and that's the percentage. Like if you have one debit spread, it's going to be percentage of number 1. If you added another one, it would be number 2. And then this will calculate the if the debit spread is winning, this is going to calculate the percentage of the maximum PDS gain, which is the one right below the green cell.
Oh, this one.
And then if the debit spread is losing, then it will calculate right below the red cell and will express as a percentage of the loss. And it's obviously, up to the trader to decide trigger points or tipping points or whatever you'd like to phrase, however you'd like to phrase it in terms of doing something. So that's basically the way I do it. I'm not saying that is the best way to do it, but since I do it on the debit spread as a whole, that is a relatively constant feature. Even if let's say the market rallies and I decide to do a reverse Harvey, meaning to roll down the long leg. So then I'll realize a gain on that leg, and then I will add that gain to the down
This one.
the Robin's Egg Blue cell, right?
Oh, this one.
Yeah, so I'll add it to that, and then that will factor in to the net P&L. So so in that section that you're in, the current P&L open tracks the P&L of everything that's open, debit spread and credit spread, everything. So if you have more than one credit spread, if you have a call credit spread, whatever you pardon me, whatever you have that is still open, it will calculate that. And then the net P&L will include whatever realized gain or loss that you've accrued on whatever it is. And you have to put that in manually, which means you obviously have to track that. And I have a calculator and you have calculator too, so that you can calculate what your realized gain and loss is. And then at the end of the day, I compare what I have with, importing the trades in Thinkorswim, and they, unless I've made a mistake, they always match up.
People are asking for copies of this. I guess what I could do is make a copy of this whole sheet and just attach it or add a new tab on the one that I'm working with. So then you can choose which one you want to use, this version or the one that I'm working on.
Yeah, I mean,
If that's
Tom,
okay, I don't know.
your spreadsheet is great, Tom. I mean, I don't see why, I don't understand. Perhaps someone can explain why you would want
One's
a
better
copy
than
of
the other.
mine.
Yeah, it's the
It's
same
just
information.
same information. It's just that I'm used to this one, but I like Tom's spreadsheet a lot. And I don't mind giving out the raw template here. The thing is, I just,
It's unsupported.
I'm not gonna respond, and I don't mean to be nasty about this, but I'm not gonna respond to any questions about my spreadsheet because I've been there, done that, and I just get, inundated with, well, how come this, I put this in and it didn't work. And, and I understand that it's very frustrating when someone gives you a copy of something and it doesn't seem to be working. You want to make it work. I get that. And I don't mean to be nasty about it, but I just don't respond to that anymore. And so I hope everybody understands. I got overwhelmed by spreadsheet email. Spreadsheet
Questions.
emails. Yeah.
Yeah. So I can add it, but it'll be completely unsupported by Dan. I'll try and answer questions, but I'm working on an updated kind of version of this. So the only other question I had is, say you do something with your debit spread, I guess you're going to have to change these original premiums. For instance, in the case where's mine? This strike never changed. I just adjusted the short strike up. I kept rolling it up for credit, but this never changed. So when you're comparing the old one with the new one, this isn't quite right. So how would you account for that in your spreadsheet?
Right. I only look at whatever debit spreads are open. So if I have closed an entire debit spread, then that will be reflected in the realized P&L. It either made a gain or it made a loss. If the market dropped, it would have made a gain, of course. If the market rallied and I decided to take off the entire debit spread, then the loss will be reflected in that realized P&L cell. If I do it by a single cell,
Just like rolling one leg up or down.
Yeah, I mean, I do it the same way that you do. The remaining leg that didn't change, the price is going to be the same. Everything is the same. And so then I just substitute the new leg, and then that becomes a new debit spread. And whatever gain that I lost, a gain or loss that I had from the rolled leg, I incorporate that into the realized P&L. So so in other words, I keep a running total of the realized P&L.
Right.
And it takes a little practice, but it matches up at the end of the day with when I import the simulated trades and look at them, it matches up. So I know it's accurate.
I guess the only question I have is on my spreadsheet. This percentage change is, I got to figure out the right way to do it. Right now, it's looking at the net cost versus the current P&L. And if this hasn't changed, it's the original, it works fine. But And then this might be correct, but so this one didn't change. That's the original price. And then this was the one that was rolled up. It started out at 43.60 and got rolled up a few times. So
So yours then reflects the change, whereas mine reflects a percentage of either the maximum gain or the cost in the case of a loss.
yeah, so I've got
So
the
the,
profit available. I probably just need to rethink, where this is getting calculated from, but I think I've got all the right information.
well, I think so, yeah.
Yeah.
Hey,
And
Tom, what I don't see is a static P and L cell like Dan has on his, where once the debit spread was rolled, he accumulates and just statically puts in the gain or the loss
Oh,
on rolling the debit spread.
it says that the closed contracts down here,
Okay.
and then these all get added up into the P&L. So, and this notional one, this is just for making calculations. Like, say you want to get out at like a 3.5% gain. It knows how much your margin is, so you can just type in a number and say, well, if I have like 500, this may be a little bit too much. Maybe 480, 475, 470. So maybe I want a $475 profit to get a 3.5% return. So that's just calculations for kind of planning how you want to get out of the trade. What's your profit target kind of stuff. So I don't know. People probably didn't know what that was, but it's kind of a back testing or planning thing.
that's a nice feature.
But it's getting there. Like these strike lists, Dan, they're actually calculated, so you don't actually have to type them in. So you can just use the mid function for the string and look at the strike or the Oprah code.
Oh, yeah, yeah, okay.
And then you start at position 13 and take the next 4 characters, and that's this strike. And then you do the subtract the one below it, and that calculates the strike width.
Yeah, that's very nice. I actually know how to do that, believe it or not, folks, but I'm too lazy to do that. I'll be honest with you.
Well,
I know how to
it's not
work
hard to
with,
type a number in either, right?
I know. Yeah, I learned how to do the string thing when I used to many years ago be able to program in BASIC, which is all I ever learned in terms of programming language. So I know how strings work, and so I do know how to do that, but I just keep a calculator on my desk and I just, punch in the numbers and I got it.
Right. Now this back trader thing, this is when you want to do back testing, calculates all the ratios and stuff for you, but it lets you kind of go back in time and see, like what your standard deviations should have been, what strikes you should have been looking for. The easy way is just pick like a 10 or 11 delta, and that's probably going to be what you were going to find anyway. And then
I
this
didn't
is also
understand how that works, Tom. I looked at that and I didn't quite get that.
okay. So basically, if you want to do a back test, like here's one started on the 22nd of July last year, and then that was the margin, the price that you have. And again, these light blue background squares are the ones with user input. So you put in the price that SPX was when you started the trade, and then just copy it down here. But this will calculate the change per day, or from trade launch, what the market's done since you entered the trade. And then you don't need Oprah codes. You just put in the strikes, and it'll calculate the strike widths and everything. So all this stuff you put in, and then as you go through time, then you keep updating the prices of the spreads, and it'll give you all the metrics like the delta, the market sale ratios, all that stuff, the P&Ls, the loss and gain for your debit spreads. So it helps you figure out when you should have adjusted. And
That's nice. Yeah, that's very
it
nice.
takes a little manual work, but it has all the metrics that you need to look at when you're running the trade live. So that's how I was doing the back testing. And then I also have a trade on ES, just kind of playing around with it. It was the same size trade. It was a 6 lot, and the margin was half. This makes sense. It's $50 a point. I think I prefer SPX. Commissions are lower and it's more granular, like the ES futures options. It's always bothered me that if a spread is over $5, the increment's 25 cents. So, you can go 5.25, 5.50, but you can't go 5.30, 5.35. But SPX you can. But it works. So if you don't have a big account, you can do these boxcar trades with the futures options with smaller margin, which is it's a nice option. And then this is the page that I use when I'm planning the next trade. So right now we're 4 days to expiration. So we'll put in, let's see, I wonder if I can get next Wednesday's trades or prices in here, the 30th. Let's see if it loads those. Yeah, here we go. Okay, so then you would go to Thinkorswim for the option chains for the 30th. I guess that's this one. So we're looking at 22.32. And then this is your standard deviation range. So 1.3 to 1.4 standard deviations. To scroll down is right here. And you can see the delta. I can probably hide this. Don't need that. I was debugging something. But here's the 12, about a 12 delta. If you go 1.5 standard deviations, now that's going to be, yeah, here's your 10, 11 delta. So you want to get as far away as you can for more safety, as long as the premium's okay. And this is calculating how much credit you're going to get for a 25 wide spread. And I found around $1.50, $1.75 is pretty typical. So these are about the right prices. So I'd probably pick one of these strikes.
Yeah,
What's
that's
your,
actually pretty, that's very nifty. That's one of the neatest things. I mean, obviously I look these up manually. It doesn't take long, but pardon me, but to have the chain right here like this, pardon me, I'm eating some eggs while I'm talking, which
oh, sure.
is pretty stupid anyway. But yeah, this is a very nice feature to be able to do this. And you're right. I don't take less than $1.60. That's my minimum cutoff
160.
for a weekly spread. And even doing it on Monday, which I don't actually have anything on right now. I was going to try to get something on Friday, but pardon me, folks, but we had the rally, so I didn't get anything on, but I'm going to try to get something on for today. And even though this is Monday, I'm still going to not take less than $1.60.
And that's for Friday's expiration.
Yes, that'll be for this Friday's expiration.
So that'll be the 25th. So let's see what you can get here.
Yeah.
Well, it looks like 11 delta is $1.90. So you should be able to get a nice trade on.
Yeah, I think I will be able to. Yeah.
And I just closed this one for a nice profit. I guess I could open another one. Typically, you do a little bit smaller size on the late entries.
Yeah, I typically do. So certainly on Tuesday. Today I will probably try to get my full size. but if I've had one on, let's say I put one on the prior Thursday or Friday, and it did really well, and I'm up, we'll say 3% or something, and I decide, okay, I'm just going to take my money, but now it's only Monday, I'll do another one. Well, then I would do a smaller size.
So like today, I just closed one, and you would put a smaller one on today for a
Yeah,
Friday expiration.
Yeah, I probably would, because I'd want to make sure that I didn't lose the profit that I made on the first one.
Right.
Tom, I'm going to have to get some water here, so
Yeah, sure.
I'll hang up. I'll be back.
Okay. And Andre, the back testing tab does not have any connections to the database. That's all manual entry. Because, I don't know if Thinkorswim can input with the RTD like previous data. Does anybody know that? Maybe it's possible. Let's see. RTD. I don't know if there's any way to grab a historical price. Oh, and Anderson, no, you can't. Okay, so yeah, the back testing is basically all manual, which makes it a little tedious, but you can do it. A historical, oh, go
I
ahead.
I notice you're using version 0.015 on your
Right.
spreadsheet. The library's got version 0.013 or
Oh, it does.
0.13.
Did you look on the docs page?
No, no, I haven't looked at the docs. I'm in the library on the landing page right now.
Oh, well, go to the docs page and that should have the latest version.
All right.
You can also go in the forums too. Let me just look for
Uh,
Boxcar 6. There it
Perfect.
is.
Yeah, I see Excel planning version 0.0.15.
And then I've got this. I could probably make it a sticky thread, and then I just update the first post in the thread with the latest version too.
All right, my friend.
I should probably just make that sticky.
Yeah, as detail-oriented people notice things like that.
Yeah. Okay. So this one should be sticky now. It doesn't say it's sticky, but probably is. So this, oh yeah, it is right here. So this one should be at the top, so you can always get the latest version there. I'll probably update it later today. Oh, and Andre said there's an option to use database app for RTD. Oh, well, I'll have to dig into that. You can get historical if you use on demand. The historical data I'm using, I just get from Option View or OptionNet Explorer. I just go back in time with that if it works. I don't know if this ever loaded. How come that's not showing anything here? Well, that's not good. So
As you're working toward that, I know we've still got a few more days where you're offering this before it goes into subscription. Any idea what you're going to be looking at for subscription?
oh, I don't know. I haven't really thought about it. It's not going to be like Steve Gantz is charging $500 a quarter, which is a little high in my opinion, but
Mhm.
that's like 167-ish a month.
Okay.
So
Okay.
it's not going to be that, probably around 100 quarter, somewhere in that range. As long as it's making money, it should work out, right?
Has it not made money? I mean, right now
Uh,
with the volatility that we're seeing, it appears that you're opening and closing with a couple of adjustments rather quickly. If we
yeah, I
get
mean,
back into a situation like back in 2018, 2019, where it was just an incessant climb, have you taken a look at that in back testing, or has Dan?
well, I did one for the round table. It was like, well, actually, it was on this back test tab here. It was a July trade. But if the market's grinding higher, this should work out fine for the trade.
Okay.
There's very little risk. I know Dan likes to do like 1.1, 1.2 times if you're opening the trade the prior week. So that can actually, if it's greater than 1, then you're going to have a slight debit on the upside. I tend not to do that, but I could, as long as you're adjusting it. If the market's going higher, you just have to be careful not to let that get too far out of control. Cut the losses on that debit spread that's losing money.
So I'm back, Tom. My apologies to everyone for coughing in your face. I may cough a little more here, but
Oh, no, that's fine, Dan. Not a problem.
At least it's not contagious through the webinar, Dan.
There we go.
well,
Yeah.
no, I swallowed some egg and I shouldn't be eating while I'm talking, but to answer the question on the upside, that's actually okay, because you can simply reverse Harvey your debit spread, and then you basically have no upside risk. And if you're in the sweet spot, the trade will still make money. So the times that you're more likely, well, let me phrase it like this: the situation that I've made the highest returns are those in which the market drops a bit, and who knows what a bit is, but a moderate drop, you harvest money on your debit spread, but your credit spread strikes are so far out of the money that they just keep accumulating theta, and you wind up making a combination of the profits from the credit spread and the debit spread. So that's a kind of a sweet spot on the downside. The bad situation is if the market just really tanks, and then you have to keep doing things. And at some point, you may hit the 5% and you simply bail and say, well, depending on when it is, if you have to bail out early, you might still have a shot for the same week, but otherwise, you just say, okay, I'll take my max loss this week, but I do these every week, and with a 75% win rate, I know that it will have positive expectancy.
Yeah, you should end up with a positive month normally, even if the max loss happens.
Yeah, so that's sort of the way that I think about it. And Tom, I don't know if you like to add a second debit spread, and it, either way, what I like to do is before I do the first leapfrog. So if we get up to a short strike delta of say 18 or even 19, the first thing I'm going to do is I'm going to add a small debit spread. It won't be as wide as the original one. But I'll add a second debit spread. Of course, these will be new strikes because the market will have dropped. Now, this is assuming that I still have the original one in. So let's say that the original one, clearly it's making money, but say it's only made, we'll say maybe only 8%, of the maximum, which is not a lot. I'm going to leave that in, and I'm going to add a second one, but it'll be narrower width. And then if the market continues to drop, I will obviously harvest the profit on the original debit spread, but then I also have number two, which will be making money as the market drops. And then, at some point I'll have to leapfrog. That's sort of my approach.
And on the debit spread number two, would he put that also close to the money, like 1 or 2, 3 strikes out of the money?
Yeah, generally so. Yeah. You wouldn't necessarily have to do that. It all kind of depends on market tone. And I would emphasize that I think it's important for people trading the boxcar to use other price action metrics. For example, the VVIX, I monitor, and I know you do as well, Tom. I monitor a 2-minute chart of the VVIX. You could use VIX, but I use the VVIX. And I also look at a 2-minute chart of the SPY or the SPX, and I'm looking for market sentiment. I'm looking for support and resistance zones. I will draw fib grids. So I think it's important for the trader to actually look at what's happening in the broader market.
Yeah, I think I'm looking at a 5-minute chart. It's hard to say on here. That's a 2-minute.
Yeah, 5-minute works fine.
Yeah.
I mean, what do you do, Tom?
I usually
is that
use a
something you
5-minute
do?
chart. Yeah,
But I
this is
mean,
what I'm watching out.
But I mean, you think it's important to look at the broader market and see what's happening.
Yeah, and I also use these charts. I've got I have to make them so that you can actually see individual things here. So I look at a daily chart just to get like the big picture.
Yeah, me too.
And then I like this ease of movement and the RSI. So these all kind of work together. And then also this parabolic stop.
Yep, that's good too.
And then these are the those grab candles. I forget who was a lady who did those. You remember?
Yeah,
her name?
Rocky Horner.
Yeah. So I use these just kind of a combination to get a feel of what it's doing. Like here, the ease of movements rising, going above 0, RSI is above 50. These are turning green. So the parabolic stop is switched from bearish to bullish. So all these things are kind of pointing to the market's going a little higher. And
Yeah, the only,
that even aligns with the longer term daily chart too.
yeah, yeah. I think that's a good idea. And the only other thing that I do, and this is on a daily chart or an hourly chart, is to draw fib grids, because it is amazing. I mean, obviously there's no real magic to this. It's not a magical number. It's just that psychologically, turning points are at the 61.8 and the 78%.
It
And
does happen quite frequently, doesn't it?
it's just amazing. And I use that on day trading as well. So I think people should be, should get familiar if they're not already. Probably most of the people that are listening now are already good with this, but I think it's important to be able to draw a fib grid and look at not only those numbers, but also the extensions. The market will often turn at 126% and 150%.
And the
And
Murray math lines based on Gann's work are also interesting.
they are very interesting. I don't really have much knowledge on that, but I have looked at that. Yeah.
In fact, I think that's mainly what Mark Ansel's using with the night owlers, the Gann stuff. He's got it all. He's
Right.
got some massive spreadsheet, but yeah, I take a look at this for market sentiment and see which way is more likely we're headed. Kind of big picture, the real easy way is just look at this ease of movement from the daily. Okay, this is up, so that's more likely to go up than down. And here, it's also heading higher, so
Yep.
not too much fear right now.
And you could also, on those same charts, like I have, momentum bubbles, as I call them, little windows that appear, and I have it calculate the momentum and and I have another one, the 412, which means that the EMA 4 relative to the EMA 12, and if it's, if the 4 is greater, it'll be a green bubble. If the 4 is less than the 12, it'll be a red bubble. So you can kind of see that at a glance. And but I think those are useful things to look at, because like we've talked about, you can't beat the big market. You as a retail trader, you're never going to beat it.
It's
Unless
like
you're
Joe
having a
Ross
lucky
used to
day.
say, you got to be like the Ramallah shark that hangs out with the big shark and just eats the scraps. So
Yeah, right.
but you don't want to get in front of him because he'll eat you. So
Yeah, or you could be the sucker fish and hang on his back.
there you go. Either one of those works. So I found this the grab candles. It was she had put it out for free online somewhere, and I actually downloaded the script. So if anybody wants this, I can put it in the library. But they're nice candles. I know you use them too, Dan, right? These grab candles.
Yeah, I have grab candles on everything. I think they're the easiest way to see. And then if people want to shell out some money, you could buy the voodoo lines from Simpler Trading. They're actually pretty good. I don't have that myself because it's a little pricey. You can buy it, I think they have, last time I looked, there were different packages depending on what you wanted to buy them for certain stocks or
Like indexes
for
or
futures. Yeah.
I'll take a look at it, but you said they're pretty good. Are they like GAN based, or do you know?
They're not going to tell you.
Oh, they're proprietary.
There's one guy, I've forgotten his name, but he's one of the principal traders and programmers there at Simpler Trading. And he worked this out actually several years ago. They've been around a while. And they're not going to tell you.
Okay, I'll take a look at it. And yes, Charles, I will put the grab script in the library for everyone. So this was the trade. I'll kind of go through. It's not the same as a back trader like O&E or Option View, but this was the initial credit spread for $1.50. So I didn't quite hit your $1.60, but it was close. But a 6 lot, I picked 6 because it's divisible by 2 and 3. It's a perfect number. So if you want to take a third off or a half, you could do it easily versus like a 10 lot. So I might stick with multiples of 6. So instead of a 10 lot, I'll do a 12 lot. Again, easy math if you want to take a third off. But that gave me a $900 credit. So you could go up if you did just a 1-to-1 ratio. You could do $9 for your debit spread. I went a little bit less. I did $640. So when I got filled, it looked like this. So we had a $260 potential profit on the upside. And then I don't know if these are in order or not. Let me see. What was the next thing I did? Oh, I rolled up the debit spread from 40, well, the short leg from 43.60 to 43.70. So that would be this one. I guess it looks like they might be in order. So that that lifted this up to 510 because that was a $2.50 credit. You can see this popped down and the margin increased a little bit. So if I just flip back and forth here, the margin here is 12.7 and here it's 13.5. So it did bump up a little bit on the margin. And then the next one was, what did I do? It's here, 41.15. Oh, that was taking off half of the position. So that's where it was on Friday, and weekend risk with Ukraine and stuff. We had a nice profit, so I didn't want to really risk that. So I took half of it off. So I bought these 3 for 45-cent debit, and then I rolled up the debit spread was 43.75, 43.65 at that point. So I rolled it up 5 points, which effectively cut it in half. So that put us here. And then what was the next one? Seems like there's an extra one here. 10 credit. That would have been, I don't know if that's right.
So I think you handled this one really well. And I think it's a good idea, like Tom was saying, if you've got a pretty good profit and if you can take it out on Friday, if you just take off, half, you've reduced your risk substantially. And it also is easier to adjust. You've locked in some profit and now you still have some trade left that you can allow to run, but it'll be easier to manage.
And so Andre said, how did I decide to roll up the debit spread? Well, I wanted to cut the debit spread in half and it was a 10 wide. So I knew if I just made it a 5 wide, that was cutting it in half because I was cutting the credit spread in half. So I just wanted to have everything. So that was just a real easy thing, just to roll up that short strike for a credit. And then as far as like when I'm rolling things up, I'm looking at the P&L when that debit spread's lost like around 20%, then it's time to do something. You don't want to let that get too far because that's hurting you, if you'll just get rid of these. The credit spread is where you're making your money, and the debit spread on the upside is losing money if it keeps rallying. So you don't want to let this affect your profit too much, the debit spread, if it just keeps going, or even just staying up here and time passes. As long as this debit spreads, if you don't need it for the delta, for instance, I think on Friday I looked at the delta and it was really low anyway without the debit spread adjustment. But I wanted to try and save some of the profit, and if the market rallied, if you harvest some of that and just lift this up a little bit, your returns will be just slightly better.
Well, right. And, the farther that that the spot price of the SPX is above the short strike of the credit spread, clearly the less risk that you have. So I generally at that point make the debit spreads even narrower. Because there's not as much that I have to hedge.
Right.
And so one thing that I use is the credit spread to debit spread ratio, and I will often change the numerator of that, namely the credit spread side, to be the amount of money that the existing credit spreads have left that they can make. So for example, if the credit spread, I'll just pick a round number, the maximum amount that it might have made would be 1,000, but the market has moved up substantially and you've already made 500 of that on paper. You're assuming that now your risk is reduced. So you're really only wanting to hedge about 500 of that. Now, obviously, that's a subjective determination, but I have another calculation for that as well, because you don't really need to hedge off the entire 1,000, because you're making the assumption that now you're probably 2 standard deviations away from that, and with diminishing amounts of the time remaining, the odds of that hitting are minimal. So the adjustments on the upside, like Tom was saying there, I mean, he's got it exactly right as always. The adjustments on the upside are easy, but you do have to do something, because remember, you started the trade where you had either 1.1 or 1.2
Debit to the credit ratio.
Right, a debit to the credit. So if you just let that sit, and you let it sit until expiration, and you come back from vacation and you say, well, I don't understand. The market moved up a lot and this trade lost money. Well, it lost money because you let the debit spread sit there. But if you had done something with it, rolled it up or whatever, the trade would have made money. And this also goes, if you make the decision to add a call credit spread, which you probably, you don't want to do that right away. You want to wait until you have some practice with that, because a call credit spread can burn you. I had some on Friday, and I had put them on Thursday, thinking we weren't going to rally up much more, but that was clearly wrong. So I had to cover them, and that definitely impacted my trade for last week. So you want to, so it's the same thing with a call credit spread, or a debit spread. If the market is rallying, you got to get that off, or you have to change it.
Another thing to think about in your analysis is how much money can I potentially make versus how much margin is it tying up. So for instance, this is what I was looking at this morning. We were basically at the maximum we were going to make if the market stayed above this long strike of the debit spread. So it's really kind of dead capital, unless the market sells off a little bit, you make a little bit more. But given the way the charts are looking, it looks like we're probably not going to do that. So I was thinking, there's really not much juice left in this trade, so it's probably time to just close it. And yes, I probably will put another one on today, John. And see, Tom.
Another thing you can do in that situation is you can take off the debit spread that you have, and if you're going to be near your computer on the, on that day, you can simply watch it, and if it continues to rally, then your credit spread will be generating theta, and it'll be unabated by the debit spread. But then before the close, I'll add a very narrow width debit spread. And the rationale for that is if the market then drops off the following day, I'm going to make some money on that debit spread, but my credit spreads are still way out of the money and are not going to be hit.
Yeah, I think when I was looking at the price slices, I can probably go minus 2. So there's 2 standard deviations today. When's the expiration? That's for the 18th. That doesn't seem right.
The odds of that one being hit are minimal.
Yeah, I mean the delta of that, what strike is that? That's 4140. Let's take a look. 18th. Wait, no, that's the 25th. So the 4140 delta is what? That's right here. 2. So yeah,
Yeah.
it's basically almost 0.
Tom, one thing I remember somebody, perhaps on the roundtable thing that we did, ask if you could show them, how you would be able to put in a contingent order to do a leapfrog when, if the delta of the short strike went to 19. Did you
Oh,
want to show that now or not?
yeah, actually, could you show that? Because I'm still kind of getting my thinkorswim legs back.
Yeah, sure. Sure, I can show that.
Let's see. Let me stop
Let
sharing my
me,
screen. And Tom asked if I could share a link for my 5-minute daily chart. If I can figure out how to do that, sure. Let's see. Oh, share. There we go. Share
all right. You want me to go ahead and share now, Tom?
Yeah, that's fine.
Okay. Let's do that. Okay, you should see it now, right?
I do. Yep.
Yeah. So I'll show that in a second, but this is what I was talking about, the bubbles here. I call them bubbles, but this is a momentum bubble, and this is the 412 that I mentioned, and this is the 1025 that I mentioned. This is a 2-minute chart here. And so this just makes it kind of easy. If you have green bubbles all the way, whatever that you're showing is obviously moving up, which is what's happening here. Same on the video. And so you can see that at a glance. And these are simple think scripts that are very easy to make. Anyway, what I was going to show was what we were talking about. Let's go to, pardon me?
I have a contingent order.
Oh, yeah, right. So, okay, so let's just say that you had one on now, and let's just say it was this let's just make it let's just make it the 4,300 just for round numbers. So you see that has a 9 delta. So let's say that you were going to be away from the computer and you wanted to put in a contingent order to leapfrog this short leg when it hit a delta of 20. It's okay. So this is so the 43. So you come down here and here's a delta of 20, which is 4370. So that's 70 away from where you are now, right? Because your short strike is at 4,300 and you want to leapfrog when that delta becomes 20. So that would be 70 points away. So then you would go 70 points on the downside. So that would be 40.
4,400, 4395, something like that.
See, this is actually this is actually 4,300, so it would be 4,270. Right?
Well, the market has to drop 70 points, right?
Yeah, and the short strike is. No, I
Oh,
see what,
you're trying to figure out the strike. Okay, sorry.
yeah, I see what you're saying. I mean, you have to do this. You have to put your trigger point on the SPX.
Right.
So the SPX is at 4470, like you said. Yeah, I see what you're saying now.
Your trigger point would be about 4,400.
So your trigger point would be 4,400. So what you would do, you would have this 4,300, and you would you'd want to be buying this one back, and you could set it up as a vertical to leapfrog it. So let's just say that you had this 4,300, and you let's say you had decided your long leg would have been 42.75. So let's say you wanted to leapfrog this down to the 42.65. So this is what you have. You would be buying back one of your shorts, that's the 4,300, and you would be leapfrogging down to 42.65. And so you would want this to happen, if the SPX went to 4,400. So you come in here and you click on this little gear thing, and probably everybody knows this little gear thing right here. You click on that, and no, actually, I've got to make this. So I left out a step, pardon me. So there's the sitting order. So you'd want to create a duplicate order. So there that is. And then you come to the gear, and you want this to happen when the underlying, and so the underlying is SPX, and I take this off the mark, and this is the arithmetic parameter, and this is less than or equal to. You want to make sure that that's right. This will come up less than or equal by default, but you want to always look at that. If you're trying to take off a debit spread and you want to take it off if the market rallies up to a point, you have to click on this and make that greater than or equal to. But this will default to less than or equal to, and then you put in what they call the threshold, which is the trigger price. And what did we say? 4,200, didn't we, Tom?
4,400.
Yeah, thank you. 4,400, right? 4,400. So you click that, and you want to make sure this reads right, because if this had some, if this had a decimal point in there and you simply add something in front of it, that's going to give a crazy number, and Thinkorswim just will completely disregard that. So you want to make sure this is exactly the threshold or trigger that you want. And then you can decide if you want to do it for the day only or good till canceled. And then you can decide up here with the times, whether, like if you did this overnight, but you didn't want this order to be considered an order until, say, the market had been open a half hour, then you'd have to fill in these parameters. And that actually works, pretty well. You can fill in the times then. But for the purposes of discussion here, I'm just going to leave this as a day order. Then you have to decide, you're going to have to give the market maker something. You can do this any way you want. I usually come 25 cents off the ask. So you do it like that. So that's going to be minus 25 cents. And then you click on save, and then you would click on the confirm and send your order.
And that confirm and send should have everything that you did in that dialog box, right?
Right. So you'll want to read this and make sure it's exactly what you want. And you can see the buying power effect and all that business.
And there's the order conditions, exactly what you wanted.
Right, exactly what you want. And then since I trade the SPX in 2 different accounts, I have a multiple account. So I make sure that those match up, that I'm sending it to the correct accounts, because my daughter has one in here linked to me as well, and I don't want to send one to her account. So that's basically the way you do it.
Well, thanks, Dan.
So that'll keep you out of trouble. If you have to walk away from the computer, and if you're nervous about it, if the market drops and your leapfrog is filled, you may still, you will still have to do something else, but you will have reduced your risk and your margin.
Oh, and Andre said you can also adjust the contingent order on the delta of the strike.
You can, and if you want to do that, you can. I personally, well, this was many years ago, I tried that, and maybe I didn't really have it set up exactly right. I wasn't happy with it, so I always use the underlying. But if you like to use the delta, try it a couple times, and if you find that it's actually working, then that may be a little more precise. Now the thing is, the delta there will be a little lag on the way the delta is calculated. It won't be very long, but it'll be a little lag. So you want to make sure that you are in fact going to be filled on that when you hit a delta of 20.
Right. And I did figure out how to do the sharing of the charts. The only gotcha is that ease of movement has to have volume. So if you try and load it with SPX, it won't show anything. So either use spiders or ES if you want to look at the S&P 500, but SPX won't work on that ease of movement
Right.
indicator.
Yeah. Use the SPY, or I guess you could use the ES, or I guess you just said that, didn't you?
Yeah, I use ES.
And you have to have anything that has a volume. And there are
Volume.
actually, there are several indicators that require volume. And so if you don't have it, they're not going to work.
Right. All right, Dan, looks like we're right at an hour, so probably a good time to wrap up the first meeting. But thanks everyone for coming along with the ride. Again, I closed that one I put on Thursday, so there's plenty of time to do another one this week. So I think I'll do that today, maybe after this meeting's over. And thanks, Dan, for all your help. Really appreciate it. And
You bet. Yeah, I'm going to try to get one on later today too.
do you have, I know we talked about this on Thursday, you like to wait till like midday. Do you have any other guidelines of when you put trades on or take them off?
Well, I do like to wait a bit. Normally I put these on Fridays, sometimes on Thursday, but I like Friday. But also Monday's fine. So I like to wait until midday, and then I follow the VVIX and the 2-minute chart of the SPX or the SPY. And, I've already determined what my credit spread will be. So I leave that order sitting in place so I can monitor the premium. And when the premium looks like it's doing pretty good, I'll go ahead and click it and get filled, and then do the debit spread side.
Now it'll be interesting as the Tuesday and Thursday expirations come online. You could even, like today, for instance, you could put one on with a Wednesday expiration next week if the open interest and volume are good enough.
You could, yeah. And I think it remains to be seen whether they'll have, probably right at first, they're not going to have really good liquidity, but I would guess, judging from the other products that are out there, that over time they'll be more actively traded and the liquidity will be good with lots of open interest, which you need. You got to have some open interest.
I'm looking at the open interest on the next Wednesday, and it seems okay. Not a lot. Still probably a little thin.
Yeah.
But there are some strikes that has like one that the 43.25 put has a volume of 1569, but then 2 strikes lower, it's 5. So,
Oh, yeah, yeah. That is something that actually happens a lot with stocks as well. The at the money is, I mean, the at the money is liquid, but if you're trying to set up a spread, it may not work for you. And of course, you know, everybody who has day traded or swing traded, you know, the Roach Motel thing where you can get in, but you can't get out. And that's, you can lose a lot of money on those kinds of things. You got to have liquidity. You got to have open interest and volume.
one thing I might add to that SPX chain on the spreadsheet is the open interest and volume, just so it can alert you if
That's
you're
a good idea. Yeah, I thought
looking
you
at
had
things that
that.
are too thin.
Yeah, I thought you had that on there, but
No, I
yeah,
will add it though.
yeah, that's a really good idea because then you can see at a glance because in fact, I will probably start using that myself because that's such a nifty thing.
It's a nice tool. Yeah, I like
Yeah,
it.
but I mean, you can look at what is being highlighted and then look over and get a feel for the premium as well as the open interest and volume, and then that makes your decision for you.
Yeah.
And
All right.
so, you know, I mean, for everybody who may just be coming sort of familiar with this strategy, perhaps you haven't done one yet, or you maybe thought about it, you know, I would point out that the first 2 or 3 that you do, it will seem to be cumbersome and require a lot of thinking. But once you have a few under your belt, I think you'll agree with me, Tom, it just becomes second nature. It just is easy to do.
Yeah, it's not hard once you kind of get it. And the spreadsheet definitely helps to monitor things.
Yeah.
All right. So, Mark says rule, if you have to fight to get in, you'll have to fight to get even harder to get out. I remember Dan Sheridan had a nice saying of, you know, if the market's not giving you the prices that you want, just take your bat and your ball and go home. You know,
Yep.
nobody's making you put a trade on.
Yeah, that's, I mean, that is one of the few advantages that we have as a trader. We can either take the trade or not take the trade.
Right. All right, everyone. Thanks again. Thanks, Dan, especially for all your help and insights. Really appreciate it.
You bet.
And look forward to more trades. So thanks, everyone. And we will see you next time. Thanks, Dan.